Hello traders, welcome to your daily market update from Monday the 4th of May 2015, and we are going to kickstart the week. What I think is going to be quite an exciting week. We have the RBA minutes out tomorrow. They're going to be especially focused on by the market. We have the UK election coming to a head on Thursday, and then Friday we finish things off with the non-farm payroll. So we have a fair bit to look after and to monitor. And I think that we're going to start today in quite a subdued fashion. We don't have a lot of really important data that the market is focusing on. However, the PMI will be affecting the euro a little bit, and then we'll continue to look forward to tomorrow's RBA statement. So there's not a lot of data to focus on. The market on Friday was really selling on the back of expectations of the UK election risk, and also the expectations of the RBA potentially cutting rates on the Australian dollar. We also had a little bit of a bounce in the US dollar, and it's going to be up to the non-farm payrolls to provide direction after this week, in my opinion. So there's not a lot to talk about in terms of fundamental data, so we need to turn to the charts and see what we can find. So we're on the dollar index chart, and as you can see, we did have a bounce here, which is quite good to see on the US dollar after some substantial falls. We've broken through the major support level here at 96, and we are not yet below the next support level. I believe that if we do get a bounce between now and Friday, this will act as resistance, and we will be trading within this band. I think the non-farm payrolls, if it comes out positive, we will get a break above that band and continue on higher, as the market will still be focusing on, or get back to focusing on, an interest rate rise between now and the next 4 months, potentially up till September. So they'll start to get optimistic again with the jobs significantly improved. So the market's really heavily focused on that data, and it'll be interesting to see really what happens for the on Friday. But between now and then, I believe we could remain trading within this range, but we'll wait and see, and each day we'll have a look at it, and I'll let you know the potential outlook. But for now, we are trading between the two major resistance and support levels. Over to the charts, and we have a potential breakout here of the rising wedge on the New Zealand versus the US on the daily chart. We have taken out the lows, and it does indicate that we are looking to move lower. I think that the RBA decision will ultimately control whether we have a big breakout here on the New Zealand, as it will be affected by the RBA, and it will get pulled down with it should we see a cut, and should we see the minutes forecast that potentially the cutting cycle of interest rates isn't over yet. They haven't moved to a neutral stance. If that's the case, we should start to see some substantial falls, and the market will start to speculate about the New Zealand's RBNZ potentially cutting as well in the near term. The Australian dollar, as I mentioned, we do have the RBA rates that are in focus, and the market has sold off on expectations that we will get an interest rate cut. Now, we do have support here at 77.3. It historically was resistance and historically was support. So I think that we're going to keep an eye on that level and see what happens with the market. We'll, for now, trade within this range, looking for some indication from the RBA on the interest rates. If we do get a cut, I do believe we'll make a run towards this level. Now, if the RBA also suggests that potentially we have not seen the end of rate cutting, well, then I think we'll break through this and continue lower. So the statement is also just as important as the interest rate itself. The Great British Pound rejected the 200-day moving average in style, especially Friday versus the US dollar, because the US dollar had a bit of a bounce, and the market really started pricing in the election risk, because it is election week and the UK is focused on that. So we will wait and see how it proceeds from here, but I think the risks are going to continue. The next major support that I am focused on is $1.49.8. If I zoom out, you may be able to see here a potential shoulder, head, and then a potential shoulder that could form here if we get a little bit lower. And then it depends on the non-farm payrolls on Friday. If we do get a bad non-farm payrolls, and we have started to see the pound continue its sell-off throughout the week, we could get a bounce on weaker non-farm payrolls, creating a head and shoulder pattern. So it's something to look forward and keep an eye out for. The euro has produced a perfect hammer formation. $1.13 is major resistance for now, and we could see the market move lower. It's going to be interesting to see exactly what the market does, but the non-farm payrolls will also play an important role here on the euro this week, and likewise with European data, as we look forward to seeing exactly how things play out. If we move over to the Canadian dollar, US versus the Canadian dollar, we will see that mouse has stopped working, apologise. There we go. You'll see that we've had a bounce, but we've had a bounce off the 61.8 weekly Fibonacci. If I pull a weekly chart out, I apologise here, you'll see that the market has had a rally, and we have had a pullback and quite a large spinning top candle formation right off the 61.8, and it does indicate that the price wants to go higher. The market will be looking for a break above the historical resistance level, which was support at $1.23.5 and $1.24. There's a buffer zone there that was quite important to the market, and a break above that would indicate that the prices are looking to move higher in the future. The non-farm payrolls, I think, will be the deciding factor on exactly whether we break above $1.24. And for now, it does look like we have support here on the US dollar versus the Canadian. If we go to, here, mouse is playing up. Go to the US dollar versus the Japanese yen, we are still range bound, as you can see, and we are trading above $1.20 just, but the range bound motion for now, I think, is going to remain intact unless we get the US dollar bulls actually really cement their place back in the market on expectations of an interest rate rise. We have been in a consolidation pattern for quite some time, and for now I am not willing to put any positions on and gamble the fact that the interest rates will come to a rise and the market will jump back in and send this much higher. I'll sit on the sidelines and wait for the market to tell me when it's ready to move. So until then, I'll remain on the sidelines and keeping an eye out. Well, that's it for today. Tomorrow's an exciting day. Keep an eye on the RBA minutes, and I'm sure that you'll see a lot of fireworks as a result of that statement. And we have a fair bit of data coming out this week that the market is heavily focused on. Well, that's it from me today, and until tomorrow, trade well.